Good afternoon, traders. I'm going to do something a little bit different today, other than my normal analytics and price projection. I'm going to tell you how to trade a pattern. This one is on Polkadot.USD. And I found the megaphone pattern here, and I thought this is perfect for educational purposes. What is a megaphone pattern, first of all? A megaphone pattern consists of a bottom line of support. It looks like so, with a top line of support that increases at a rate that is higher than its bottom support. Therefore, it looks like a megaphone, a broadening wedge. To be officially a broadening wedge, you want to have these things in common. You want to have at least 3 hits on the bottom line of support. 1, 2, 3. And 3 hits on the top. We've got one here where I started. Nice big long one here. That's 2, 3, and 4. So this is definitely a broadening wedge that we're looking at. Now, as I stated, it is a bearish pattern. So what are the odds of it breaking down versus going up? Glad you asked. 73% of the time, we will break down to the underside of that broadening wedge. The way you would calculate what our target down would be is take the last point it hit the top. Let's say, hypothetically, this is the last point it will hit the bottom before it breaks through. Take that measurement, and there you have your target down at about $22. If 73% of the time it breaks to the underside, that means that 27% of the time it breaks to the upside, right? All right. So let's say we continue on up and we hit the top of that again and we break through the top for that 27% of the time we break through that top. How do you measure that? Well, I'm glad you asked. Take a trend line and measure it from the last point you hit the bottom to wherever you hit the top and break out. All right. Then you really want to cut that trend line in half. All right. So we're going to estimate here. We're going to say we break out right here. If that was the case, our target up in this case would be somewhere around $78 to $80 would be a good conservative target. All right. There is one more thing that this broadening wedge is notorious for doing, and that is dipping down below our support and then coming back up. Now, what's the percentage of time that it does this little move? 50%. All right. So it's a trick out down here. And that's why you have to set your stops and be disciplined. If I was in this trade, I would stop out somewhere down here. You know, since this particular altcoin moves pretty rapidly, I'd want to leave myself enough elbow room that I'm not at a loss. And I would stop out, wait for the price action to see where we go. If we continue down to our downward target, I don't buy back until I meet our target down at the target distance. All right. If we come back up, I don't buy back until I'm over this now resistance level, which is going to be utilized as support in the future. All right. So you have to be disciplined about trading this particular pattern and be very careful. You can be a trickster. All right. Hope this little freebie helps. And if it does, please comment, like, and subscribe. Talk to you all later.